So you have traditionally, Rob, the best month of the year, December. OK, it's up 73% of the time and on average about 3%. Yet you got this tariff issue hanging out there. Is that the biggest risk, not only between now and the end of the year, because you have a actual date where you're going to get an increase in tariffs if you don't have a deal, but going forward?
I think it's one of the biggest risks. I describe our positioning as cautiously optimistic. The caution comes from the fact that the market's discounting a lot of good news. Valuations are not excessive, but they're certainly extended. There's complacency that's creeped into the market. And let's not forget, there's impeachment process, the election cycle, and we don't have a deal on trade, which is the most important short-term issue. And I think the optimism comes from the fact that we don't think we're going to slip into a recession. The profits are coming in better than expected. And next year, we think profits can accelerate.
But part of the bet, though, right, hasn't the bet over the last, let's say several weeks been on the fact that the industrial economy is bottoming?
Yes.
And they start to look up, and then you get a number like today, which is a drop from the prior read and a miss on expectations for today in and of itself.
There's been a lot of volatility around that number specifically. But if you look at some of the other numbers, you could have looked last week: GDP, durable goods, personal consumption, retail sales, consumer hanging in there. So I think you have some mixed news as it relates to the economic data, but there's no question in my mind that the data has been coming in better than feared, and that's why we're near all-time highs, and that's why we've de-risked a little bit at this point, because we suspect that some of this news, the macro news, is going to have a little bit of an ebb in the short run, but longer term, we're going to start to flow again.
Jenny, I said we come into December with a lot of momentum. We had the best month since June.
Right.
We've eclipsed these records and set new ones, and yet we got this tariff issue hanging out there, and it seems like that's going to be the overriding factor now for at least the next couple of weeks. Are we going to get more tariffs, or aren't we?
Maybe in terms of superficial noise, it's the overriding factor, but I don't think, for me, it's not integral to my investment process whatsoever, and it's not what I look out to. I think what we're looking at right now, and I don't think it's a bet on the economy bottoming. I'm not worried about the manufacturing numbers that came out today. I'm not worrying about tariffs. What I'm thinking about is what are earnings going to look like next year. And I'm thinking about the consumer. And I'm thinking about the strength of the consumer. I'm thinking about global growth accelerating. I'm thinking about interest rates being as low as they are. I'm thinking about energy prices being stable. So trade just isn't in what I'm looking at when I'm investing.
Weiss, you had a lot of good things to look at coming into this month. If you look at what the NASDAQ's done and tech, and pretty much a broad swath of investments have worked. I mean, there's an article today on CNBC.com. Almost every investment worked in 2019, whether it's stocks or bonds or gold or this or that, corporate bonds, double-digit returns across the board. Right. So you can have turbulence out there and still have your investments work.
Yeah, so look, I shaved a little bit of some positions last week. Roku was a trading position. I got lucky. I'd sold it. I sold some Illumina. I pared back on some United Rental. And the reason I did that is because everything was up, and my own personal barometer, I was starting to feel really, really smart. And I don't like feeling really, really smart, because that means that others are feeling even smarter and things are working too much.
It's an unusual feeling for Weiss.
Well, it's an unusual feeling.
We don't like it either.
Right. It was unusual, and I'll explain what that feeling is to Rob, since he'll never have it. But that meant that it was getting too easy. There was too much momentum money in the market. So we take Roku's downgrade today by Morgan Stanley, down significantly. Why? Because it got a lot of momentum money, of which I was part of for a small period of time. Not because his view has changed. The analyst has never liked the stock. He went to underweight because he had a 110 price target on it. So it's 160. He can't stay equal weight. So I thought it was prudent to take some exposure off. I still have a lot of exposure. I still do anticipate the market moving up to year end. My other concern is trade.
Can the market move? Let me ask you this thing. Can the market move up if you anticipate it doing that? Can it do it if you get the tariffs on the 15th?
No.
No, I agree.
No.
I don't see how it possibly
can. It's down 10% in a heartbeat, and then you take it from there. But when you get to those tariffs, and when you go to the size of those tariffs, that's meaningful. We've already seen the impact in corporate America, and we haven't seen a lot of it because of political reasons. Most CEOs are afraid to talk about it.
I know that, people say, there's no way the president's going to let, the stock market decline into the end of the year. He's not going to put these tariffs on. the president may think he's got some currency to play around with because it's been a great year for the stock market.
That's what the pattern has been, Scott. You just nailed it. As every time the market goes up, he feels like he's got room to do whatever he wants with regards to trade. What it looks like, frankly, is he's bitten off much more than he can chew with regards to trade. This was supposed to be trade wars are easy to win, and here we are a year and a half plus down the line, and we don't even have phase one signed. Plus, by the way, we talked about, I think, Joe, you brought up, and Jenny, you mentioned that U.S. economic figures today were not good, including construction spending. Well, Chinese economic figures are starting to look better, a lot better. And so that takes away some of the vulnerability the Chinese I had.